Ladies and gentlemen,
Good evening.
are you ready?
Okay, here we go.
You're listening to the Deal Room Podcast. Join us as we bring you the inside scoop on business sales and acquisitions. Get across trends in the area and hear the industry's best recount their real-life tips, traps, and experiences. Now, here's your host, Joanna Oakey.
Hi, it's Joanna Oakey here, and welcome back to the Deal Room Podcast, a podcast proudly brought to you by our commercial legal practice, Aspect Legal. Now, in this episode, I'm continuing my conversation with Kristin Carney, founder of Piper Health, as we shift focus from preparing to sell to understanding what corporate buyers are really looking for when they acquire healthcare practices. With more than 4 decades in healthcare and more than 200 successful transactions under her belt, Kristin shares a rare insider's view of what matters most to large corporates and how doctors can find the right buyer fit for their people and their legacy. Now, in this episode, Kristin and I talk about the key factors corporate buyers assess when they are acquiring a medical practice, how to match your practice's culture and values with the right buyer, and the common pitfalls to avoid when selling to a corporate. So let's jump in. Okay, all right. Well, and I've just got a couple of quick questions. I'm not sure which to start from. Actually, I wanted to go back to, you talked about what a corporation is looking for.
Yeah.
Can you share us a bit of that criteria? Because this is the benefits of you sitting on the other side too, Kristin, right?
Yeah. Look, once upon a time when, the corporatization, I guess, really kicked off, there was a lot of mistakes made, and there was a lot of overpaying, and there was a lot of, we'll buy anything at a high price. And that burnt a lot of people, on both sides of, both vendors and buyers. So now I guess they're more sophisticated and, we're 20, 30 years down the track. So realistically, in all honesty, most corporates are looking for the equivalent of around 10 full-time equivalent doctors, okay, or the capacity to get there. So, and that means also, obviously physical capacity as well as, attractiveness to recruit, They're also looking for a good commitment from all the doctors, running their practices within the practice. There's no point in them actually, paying a certain price only to have 8 non-owner doctors leave within, the first 12 months. They're looking for stability of staffing, and practice management and nursing in particular is very, very important to a corporation because they can, the practice manager, if she's good or he's good, it's been there a long time, they are pretty much can be the center of the universe. And if that practice manager is not aligned to the sale or, really quite negative about it, it can be very destructive to, the transaction. So good practice manager that's willing to come on board and go on the journey with the corporation is also key. I think things like some corporations want registrar training, for the purpose of, that's a big part of their sustainability strategy or growth strategy, is that you've got GP supervisors who are willing to train registrars in the practice. Potential for subtenants if they haven't already got it, namely pathology is always a good one. So if it's not already there, the potential for it to be there is quite good, is seen as quite attractive. And then again, you've got, ideally some people leave it a little bit too late to put their hand up to sell their practice. I've had people call me who are sort of 65 and still running paper files. That is not attractive to a corporation. It's just, which is sad for them, but true. It's, 20 years of paper files, even though it's, you would think it's rare. It's not as rare as you think. So yeah, 10 FTE doctors, or ability to get there, plus good management, stable staff, quality medicine, mixed billing, I think for some corporations is key. So yeah, and good nursing to be able to access, CDM and, other nurse sort of item numbers and nurse support within the practice.
And one last question. I think sort of one of the biggest concerns for doctors who are looking to sell, but also in any other health-related space. So this repeats for dentists or in veterinary, and the concern in these industries that perhaps is a different to concern in other industries is this concern about the buyer being a corporate, essentially looking for shareholder return versus this practice that they have run that is on the basis of patient, has been run essentially from a concern for patient outcomes, and as opposed to the driving force being shareholder return. And I see this concern repeated again and again, as I said, like not just in this, but across those, those other sort of health-related industries. What is your perspective on this? Because I think it is an important consideration.
It's really valid. It's really, really valid. So when I've got a practice that is an attractive to a corporate, and that's the path that the vendor decides to go down, I actually go through a process of explaining who the corporates are, where they're at, what kind of culture that, and obviously I don't have all the information, but I've got a reasonable amount of information, and I've got clients who've sold into various corporations, and they can tell you and provide great feedback. And I was at the GPC at a little stand for 3 days, and it was so incredible, how willing doctors were willing to talk to me about the corporate that they'd sold to, what it was like, how it was going. So I actually like to run an expression of interest process to, for 4, maybe 6 corporates. But matching the culture is critical. So if you are sort of really adverse to change again, but you can tell that business does not want to enter into the next 10 years being sold to one group, then sold to another group, then listed on the stock exchange, or sold to internet partners, and they become under 4 banners in a short period of time. And it works for some, it's absolutely fine, but for others it's just not on. So it's about knowing your market and saying, look, this organisation is about growth, okay? They're never going to list, but it's about growth. They're going to pay you a good price. There's going to be minimal due diligence. It's going to be in your bank, but to be perfectly honest, you're going to lose quite a bit of autonomy, and you are going to be just left. They will think, we've spent the money, that's left. Is that kind of culture for you? No. So you don't even bother introducing them. That then you go, okay, well, this group, they might less about profit. They will, staff ratios are much higher. This kind of thing is, there'll be more nurses. There'll be no interference in how you practice. There'll be none of that. But your price is going to be a bit lower, right? Because they invest more in staff and nursing, all that kind of stuff. So you're not going to, you may have to take less if this is what's important to you. So it's really trying to understand, know your business and know who your buyers are, and just say, and not be judgmental and say, okay, well, I'd never sell to them, or, or whatever. This is who they are. This is how they operate. And this is what it's likely to be. That's about the only way. And if there's if profit, corporations back being the concept of being driven by profit and shareholders, it's really obvious as to the way they operate and the way what they're, like you can read in the financial press what most of them are planning. Or if it's about being honest and letting the vendor choose about what works for them, what they think is going to work for them.
Yep.
But
all right. This has just been such a fascinating discussion, Kristin. I could actually go on all day talking to you about all of this. But look, if our listeners, are thinking of embarking on the sale of a practice.
Or any business.
Or any business. How do they find you?
Look, they can find me on my website, which is piperhealth.com.au. Strange business name, I know. It's for my Scottish grandmother. I always get asked, are you the Pied Piper? And I go, no, he was a lunatic. He was crazy. So LinkedIn, usual Facebook, but, websites and, starting to do a bit of more of this kind of stuff too. So.
Love it. Well, Kristin, can I just say a huge thank you for coming on today to the Deal Room. Oh, my voice there. To the Deal Room podcast. It's been an absolute pleasure having you on.
It's been great. It was terrifying, but it was just like a chat.
It is like a chat. That's exactly the point of it.
Yeah. Okay. See ya. Bye.